All right. Well, it looks like we've got a lot of people already on, so we're going to go ahead and get started. So, everyone on this call, thank you so much for being here. My name is Tuesday Knight. I'm the president and CEO of SAGE, San Antonio for Growth on the East Side, and we are ecstatic that we have the Bank of San Antonio here with us today. This is a program, Ask an Expert, that we created to make sure that our community members have an opportunity to talk to the experts in our city, to make sure that they're getting all the information that they need. And so what we did was we rely on our friends, our partners at the Bank of San Antonio to share this information, answer any questions that you may have, and please ask questions if you can. And if you can't ask them during this program, please make sure to follow up with them later. I'm certain that they'll send you that information later. But again, please know that we are excited to have you here. I'm not going to take up that much time because I want to make sure that you can hear everything you can from Maitland. But I want you to know, and I want you to understand, if you are on this call, that we are here, Sage, to help you and to make sure that your business continues to thrive, that you continue to be productive, and continue to be a great asset on the east side of San Antonio. So with that, Maitland, I'm going to pass it over to you. And everyone on the call, please take out your pens, take out your notebooks, write all this information down because I know it's going to be valuable. Maitland?
Thank you, Tuesday. Thank you very much. We're very excited to be able to talk to y'all today. The title, as you can see in the shared deck, is SBA loan types and how they can help you. But I really want to emphasize that we want to talk about that in whole, but we also want to get out some information to everybody about the resources that are available here in San Antonio. And there are a lot of them, both for existing businesses and startup businesses as well. So thought we'd kind of go through each of these slides, and then maybe at the end we can do some Q&A whatever works in the time frame allotted. So with that, I'll just tell you about a little bit about the Bank of San Antonio. We are a fast-growing bank. We were chartered back in 2006, I guess 7, or began operations, and we have since we've grown from initially being capitalized with $25 million. We're now about $1.8 billion, is my understanding at last count. So we've grown very rapidly, faster than any bank locally. We're very proud of that. We're very proud of our employees and our all the things that we bring to the table, both resources for small business, cash management solutions, lending, insurance. We even have a wealth advisory group. So we have a lot of resources once you're in the bank. One of our customers, which we're always excited to bring in new customers. So with that kind of gives you a little bit of history. We've got branches in San Antonio, and we've also got branches in the Hill Country, Fredericksburg, Bandera. We're looking at Kerrville. We also have, we're looking at New Braunfels to expand and open a branch there right now. And then we have, of course, our Austin branches as well. We've got one that's been there for about 3 or 4 years now, and we're looking to open a second branch down on 6th Street. So we're kind of San Antonio. We started that way. We've grown and merged and have partners in the Hill Country area in Austin, and we're very proud of that. And we want to continue our success in that regard. And for my background, just briefly, I've been lending. I made my first SBA loan in 1987, and it's something that I've done exclusively since then. So there are very few scenarios that I haven't seen or heard about or whatever, but I'm happy to be a resource. There's contact information on me at the end of this, so feel free to reach out to me if you have questions, and be glad to do that. And then along the way, as I mentioned, I am going to give you some phone numbers maybe to write down, maybe an email address to send questions to, as well, with some of our strategic partners that we use in our SBA lending efforts. So with that, I'll move on. We've got the first slide. Really, what is an SBA loan? An SBA loan is backed by the Small Business Administration. Typically, the program annually has about a $30 billion budget. So $30 billion in loans are made annually. And of course, there was a kind of a dip in 2020 with the pandemic, but we expect numbers that are probably going to be double as far as the new loans, and that's non-PPP loans, by the way, just kind of traditional loans that are going to be made through the 7A program and 504 programs for 2021. So, and we see that volume now. The other thing about SBA loans is a lot of people don't realize they're actually loans that are made by the financial institutions, whether it's a bank like ourselves, a credit union. There are some non-bank lenders. And basically what happens is the SBA provides a guarantee for us as long as we process, close, service, and in negative cases, liquidate loans correctly, then they will honor their guarantee. So it's a conditional guarantee. So when an SBA lender asks you for certain financial information, a lot of it is just to simply comply with the requirements that we have so that we can ensure that we have a guarantee, in fact, on that loan. So I'll say that. There are many sub-programs within the 7A umbrella, if you will. And they have qualifying guidelines, different qualifying guidelines under each one, and we'll talk about some of those basic ones. Why are we even talking about SBA loans? And I think the biggest advantage is that SBA loans really offer smaller down payments than traditional bank loans. For example, on a real estate loan, if you wanted to buy a piece of real estate to house your commercial business, typically a bank's going to want 20% cash down, and whereas the SBA will allow typically around 10% down, and in some cases even less, depending on the program. The SBA terms are longer, so equipment loans, the SBA will allow us to make equipment loans for 10 years, you can see on the slide, versus the typical 5 bank type terms. Real estate loans, there are no balloons or bullets at the end of 5 years. A lot of times you hear about making a commercial real estate loan to a business, and it's got a 15-year or 20-year amortization, but there's a balloon or a bullet at the end of 5 years, and that means that they have to go back and recast that loan. It may mean new appraisals, it may mean new costs and so forth, and you just don't have any of that. It's a permanent fixed rate or a permanent fixed term loan for real estate. So that's a great advantage. And then working capital, the SBA will allow us to make loans that they'll guarantee for terms up to 7 years for working capital. And then the other thing is SBA loans, 7A loans are typically cash collateral deficient. So there's not sufficient collateral. That's not a problem for SBA as long as we have other elements in place, like acceptable credit and cash flow, historical cash flow for those businesses that are existing businesses, and solid. If you have a business plan and you're talking about a startup loan, we want to make sure that those projections are well thought out, and that there's a basis for those projections, the basis for those numbers, maybe from data that you've gotten and so forth in the industry, and based on your analysis. And we can talk about some of those resources that are out there as well. So next slide. So the first program, we'll kind of start small and work our way up, but this is a great program, and I'm going to talk about the LIFT Fund for a second. LIFT Fund is a strategic partner of ours. We have a business relationship with them, and I actually sit on one of their loan committees, and it's just a tremendous organization. They have offices in multi-state. They're a multi-state organization, but they were actually founded here. Janie founded that the core of that organization many years ago, right here in San Antonio, down on Hackberry. They are a nonprofit community-based lending organization. They have a program, a couple of programs we're going to talk about. The first, this microloan program, which is a financing program. It does have an element of it has to be SBA eligible, which that'll be a slide that these are going to be deliverables at the end of the program that you can take with you and keep with you. But there is with respect to the eligibility guidelines, and then but these are loans that they have given us information that their average loans are around $13,000, but they actually go up to $100,000. And these are loans that small businesses, whether they be startup or existing businesses, can access working capital, inventory, supplies, furniture, fixtures, machinery, and equipment, all those things you see there in the slide. The only thing they can't do is refinance existing debt, or you can't use this for the purchase of real estate, this particular program. And that's okay, probably in the scheme of things, because 100,000 probably wouldn't buy you much. And there are other programs to handle those real estate purchase transactions. These are loans under those headings that you see on your slide that have a 6-year maximum term. And the rates are a little bit higher, but there is, interest rates typically are a reflection of the risk that the lender takes. And so those are a little bit higher than maybe the typical bank rates. And that's the reason for that. However, that said, I spoke to a gentleman yesterday, and he is telling me that there are still a limited amount of funds for qualified individuals as low as 3.5%. And that's a fixed rate. But typically, those rates range somewhere between 7 and 12 years. So those are for their 100,000 and under there. Now, that said, I'm going to give you a little quick stop point on those microloans. If y'all could take this number down, I'm going to give this to you. It's an 888 number, but it's local. So you can dial locally and you'll still get this. The phone number for Lift Fund is 888-215-2373. And you can also access information, specific information to your request, perhaps, or any maybe more detailed information. If you can't, if you don't want to call them, you can also email them at info@liftfund.com. info@liftfund.com. So that's a good contact there. Everybody there on these $100,000 loans, the other thing that's really neat about it is that they will provide consulting services to you. If it's a startup business, they also do just a great job with helping you understand how to structure your business, how to get things started, how to approach establishing the business with legal documentation and things of that nature. So they do provide all that assistance. Typically, you'll call, make communication with Lift Fund, and set up an appointment and go in and tell them kind of what you're looking at, what your needs are. They will probably be looking at either the microloan program, which we just discussed, or this slide here, which is the SBA Community Advantage Program, which they also deliver. And they're licensed to deliver. Actually, the Bank of San Antonio is not a licensed Community Advantage Program because of the requirements that you have to be a nonprofit and so forth to deliver this particular program. So the Community Advantage Program takes care of loan requests a little bit higher. It will allow for real estate secured loans. They will allow terms up to 10 years for those. So it's not a particularly often used program for real estate, because you can actually, in subsequent slides I'll show you, get financing for up to 25 years. But They also, the rates, typically what you're talking about is the same kind of working capital loans, inventory loans, equipment loans, things of that nature. Could be debt refinancing. That's a very common use of these community advantage program loans. And then prime +4 to prime +6 is their typical rate range for that. Interesting that fully two-thirds of the loans made under community advantage are actually startup loans. And again, they themselves will offer the service of bringing you in, having that conversation. They are very, very good at helping you navigate the kinds of things that you need to be thinking about when you're starting up a business. It's complimentary, the consultation that they provide. There are no prepayment penalties in these loans. You're just going to be focusing on developing a business plan to show them that you can certainly cash flow, because obviously you want to cash flow to pay the debt and support yourself and your families and all the good things that small businesses do. So the business plan is very important, and they'll provide strong assistance in that regard. Owner injection. This is typically they will require 20%, but business acquisitions, and that is to say, if you can find a small business, there are brokers out there who you can find if you go to various websites. You can Google, and they're selling businesses, and oftentimes you can get you can buy a business with as little as 10% down. And again, these are all for loans under, well, the maximum loan being $250,000. Now, we'll say because of COVID, there's a sensitivity for that SBA has, and of course, since they're guaranteeing these loans, we as lenders have, that we have to be mindful of the effects of COVID and possible recurrence of something like a pandemic like we just experienced. So they're going to look at business plans and projections, particularly through a lens of the possibility that something like that could exist. So it might be good to speak in your business plan about things that, if a pandemic, you might want to provide for a contingency that if a pandemic were to occur, you want to make your business plan, you want to think about it and go through and really make it as bulletproof as you can. And so that there is a consideration there that you need to make and talk about in your business plan. The next kind of stage is the SBA Express Loan Program, which is soon to be, very soon, and so soon that I'm just going to say it. It's going to raise from its previous level of $350,000 up to $500,000, and that's a done deal. So these are loans that obviously that are going to cover that kind of that 250 to 500 range. These are loans that the Bank of San Antonio is involved in. There is a guarantee fee, typically an ongoing servicing fee that the most important thing that y'all need to be cognizant of is that it's a program where they're trying to make it easier on borrowers, easier on lenders. So what they do is they delegate a lot of the underwriting, the way that we underwrite. They say, look, y'all are banks, you underwrite loans 500,000 and under. We're going to let you kind of process these and underwrite these. That is to say, analyze and make credit determinations on these loans, much the same way that you would any other loan. And we're going to offer a 50% guarantee to you to do that. So what we typically use that guarantee to do is, again, provide that longer term, provide less down payment from our borrowers if a down payment is required. In many cases on these express loans, we're finding that we actually these are loans that we're finding typically we don't see real estate requests in this kind of area. We're typically looking at a lot of debt refinancing. We can also consider lines of credit, and we can, of course, consider term loans. These are great loans for businesses that are kind of expanding. They may have had, you could actually get debt from Lift Fund on a community advantage loan, and then you're hitting the next step, and you could come to us and we could coordinate with Lift Fund and work out some sort of structure where maybe we refinance their loan, take them out, depending on what kind of a loan it was, and then add to it. You know, provide you always, all along the way in the growth pattern of your business, the capital that you need to continue to grow in the direction that you've been growing. And so combinations of all of these types of uses that you can imagine, if you need to refinance some debt, but maybe you also have some inventory needs, need to stock up on inventory. A lot of times you may be in a transitional phase where you've decided, well, you know, we need to expand into a different line of business, but we need to fund the payroll to do that. And it's going to cost some money to get some people out on the street, to provide them with the resources that they need to get out there and do this. But we think it's going to be a profitable endeavor. And so they'll give us projections and so forth. And then we'll provide, we can provide the capital to make that happen. And a lot of times on a term basis, because that's appropriate. And then the pricing is of course, you can see there, it's a lot less. See there at the prime plus 2 to 2 3/4, excuse me, variable quarterly. So that's the express loans. The higher up you get, you're kind of getting into better rates and that kind of thing. And so that's a great program, the express program. And now we're kind of getting into another area, which is loans from 500,000 to 5 million. And those get a higher guarantee. The requirements on those loans for underwriting is more stringent, as you would expect, as do the requirements for, you know, as the loans get bigger, the requirements get a little more, you know, it's going to be it's going to require more analysis on both our parts. And so these are loans that we, as a preferred lender, we're a preferred lender, an SBA lender that has basically authority to approve SBA loans on behalf, excuse me, of the SBA. That is to say, there are banks and credit unions out there, and they make SBA loans, but they still have to submit those loans after they approve them to the SBA to get their approval. And we don't have to do that because of the volume and our credit quality and so forth. We have earned the preferred lender status, or PLP status, to process these in-house. So the process is much quicker. And so this is kind of the bell cow program. You see that 5 million. Now keep in mind, you can have as many loans, you can have multiple SBA loans as long as the total, for simplicity, is the total doesn't exceed 5 million. It's really that you don't have outstanding guarantees in excess of 3,750,000, but it's about the same. There is a guarantee. Can you go back there? There is a guarantee fee that's associated with that. Closing costs and things like that are typically financed into the SBA loan. So there's you kind of take the whole project and then you figure out what the percentage of equity that's required, and then that's a percentage of the whole project. So if you're buying real estate, you'd purchase your real estate, you'd have your closing costs, including the guarantee fees and so forth. You take all of that, ball it up, and then if we finance 90% of that, then that's how it's structured. And then the uses of proceeds are always term in nature. There's no lines of credit that we use under any of our PLP product. and we do construction loans. You can see all the uses there, so I won't bore you with that. And then these are kind of just some basics. I'll just hit the highs. Good character basically is going to be determined mostly by credit reports. There's a questionnaire that SBA has certain questions that they will ask, and bankruptcies are pretty difficult to overcome, and so they're basically, you just have to go through that. If you feel like there's anything in there that may be questionable, just tell us up front and we can go through. And a lot of times they're not as bad as you think they are. Businesses must show the ability to service the debt. That's really what SBA loans, as we talked about, are. They're cash flow loans. So it's almost understood. All SBA loans are under collateralized, and we have the guarantee to substitute for that lack of collateralization. And then borrowers need to provide certain things. A lot of times, because it is collaterally deficient, the SBA says, well, we need, if we have a business that's really reliant on one individual, we need to get a life insurance assignment on a policy in case that person were to pass away. And then of course we need liens on the properties that we're financing. But a lot of times the SBA, if it's not fully secured loan and you have a rent property or something like that that has some equity in it, they'll want to take a lien on that. So that's not uncommon. In fact, that's when we get the personal financial statements in our applications, we kind of look at those to make sure that we don't have that issue, and then we deal with that right up front. And then with physicians, a lot of times we'll get disability and or office overhead insurance. So next. And then high level eligibility, really the SBA loans are eligible for you must be a for-profit. A little different. I don't know if y'all recall, but in the PPP loans, there were nonprofits were eligible, that kind of thing. So anyway, so it has to be a for-profit business. You can see apartments, rental businesses typically are not eligible, but those are considered passive type businesses. Non-speculative, so home builders, developers, a home builder that goes and buys lots and builds homes on, that's kind of speculative activity, and that's something that's not eligible for SBA. They like to see, once a business is capitalized, they don't want to see any cash coming out of the business, so that you can't really cash out on your business equity. That's kind of a no-no. And then the SBA does have size standards, but I will just tell you, without getting into too much detail, that 99% of all businesses qualify with respect to size. It's rare that we have a business that's so big that they don't qualify. And then U.S. citizenship is required by at least the ownership of the business needs to be at least 51% owned by a U.S. citizen or a licensed permanent resident. And we will get the copy of their front and the back of the green card to show that, and regardless of the expiration date of that green card. And then business acquisitions, kind of get into those, but for the most part, that's kind of a case by case. And I would just encourage you to call me and ask me about the specific circumstance for that, and anything that's maybe unclear here. Owner occupancy, they don't want somebody going and buying a piece of real estate with and occupying 20% and leasing out 80%. That's kind of an investor type real estate scenario. So they're really, the SBA, as the name would imply, the Small Business Administration, really is here to take care of small businesses. And so with that in mind, they want the small business to at least occupy 51% of an existing building. And then if they're going to be building new construction, which we also make those types of loans under the 7A program, it has to be at least 60% occupied by the business. And so, so that, and then franchise businesses, of course, are also things that are typically financed through the SBA. Under all these programs, you might find a franchise that only has, where you could look at a microloan. We see that a lot. Some of my Lift Fund buddies over there. So, and then the franchise businesses, the only thing we need to know about them is, are they eligible and they also must be on the franchise directory, which is actually published. If you go to SBA.gov, you can find the franchise directory, and it gives you a real-time today list, and there are several thousand that you can go through that list pretty quickly within 30 seconds and search and find if that franchise is approved. If it's not on the list, then it is not an eligible franchise to be, it is not eligible for SBA financing. And debt refinancing, I'm not going to get too much into this. I could chew up a lot of time with it, but it's not enough just to refinance for convenience. The SBA, basically the purpose is to provide funds to businesses who do not have alternate sources of capital. And so the thinking is if they already have a loan in place and the loan was structured well, then the SBA doesn't have any business in going in and just refinancing it willy-nilly. However, a lot of times you may have a business that, like we were talking about real estate loans, and remember when I was talking about balloon notes, and a business might have secured a piece of real estate, financed that 4 years ago, and they've got a 5-year balloon on it. And what are they going to do? Well, those are perfect scenarios where you could come to us and look at refinancing that real estate loan. Typically there's equity in it, and we could permanently place it on a long-term loan, no more balloons, and you wouldn't have to worry about that. So that's kind of a typical scenario. You cannot refinance an existing SBA loan typically with another SBA loan, because what you're doing is you're taking current year budgeted allocated dollars for small businesses and refinancing out dollars that were already pulled out of a bucket that were allocated for prior year periods. So they really don't want that. There are very narrow circumstances under which that's okay, but they're so narrow that they're probably not worth discussing. Okay, next slide. So cash equity, that's a big deal. Owner occupied real estate, as we talked about, typically we see 10% down and require 10% down from our borrowers and businesses, which is a big improvement from having to put the 20% down, typical 20% through other areas of our bank. So the SBA is a good product to do that. And then for business acquisitions, for smaller loans, we like to see at least 10 to 15%, usually for the smaller transactions, those under 350. And then when you get above that, over 350, we usually need to see a little bit more equity in that equity from the borrower to purchase that business. Now, with that said, it's important to understand that SBA actually allows for as little as 10% down equity across the board. But as I believe is alluded to in prior slides, or perhaps going forward, every bank has their own credit standards. So SBA kind of sets their own policies. And then it's up for you to kind of find a bank that's comfortable with certain, every bank is going to have their own credit standards. And we've found that we're just more comfortable with a little bit more equity in those cases for business acquisitions. And then equipment, inventory, leasehold purchase, and acquisition. A lot of times we just have businesses that come in and they say, man, I got to have some equipment. Or, you know, the business owner might come in and she may say, hey, you know, we have one that came in, and I mean, she's looking for to expand and needs refrigerated storage. So she's got a great business. She's been running it for many years. And so we'll just typically, if her balance sheet can stand the leverage, we'll go ahead and provide 100% financing for that equipment. That's not a problem. And of course, we'll do it typically on a longer term than a typical bank loan. So the bank loan might typically, that option might be 5 years, but we can typically go as long as 10 years. So say that. The other important thing of note is that very first bullet point. No, the SBA will not allow any equity that's going into a business, any down payment, to be borrowed money. So what we have to do is we have to go back and we actually have to collect bank statements for 2 months prior to closing to show that the money that was used for the equity was actually in at least, you know, in the bank for 2 months. And that's the, you know, kind of limit of our investigation there. Gift funds, that last bullet point, are acceptable. But it's not acceptable for all of the equity. But again, we're getting into a little bit of minutia there, and I would just invite you to contact me and we can talk about specifics to your particular case. And then basic documentation checklist. There's really not a whole lot different than you're going to provide for a normal bank loan than you provide for an SBA loan. The only difference is there are some forms that we produce that do need to be executed by our borrowers, and but that's kind of, you don't have to watch the sausage get made. We do that for you, and so we just kind of take the information that we get from getting these basic forms that you see up here, and then we transpose that, put it on our forms, and get it back to you, and get y'all to review it and sign. So tax returns, financial statements for existing businesses. One thing that's a little different is that SBA does require resume forms, and they want to know, you know, what the experience level is, and then so I would say financial statements, personal financial I think the most important thing is tax returns. That's really kind of what we use to analyze in the SBA world over financial statements. So to the extent that we could get your personal tax returns, your business tax returns, always for 3 years. If you filed an extension for 2020, for example, you just give us a copy of your extension, and then we reach back maybe to 17 and get 17, 18, and 19. Get a year-end financial statement in lieu of a tax return because you wouldn't have had that prepared, and then we get an interim balance sheet income statement for the business. And of course, these are all talking about existing businesses. So, next slide. And then this is more detailed, and you can kind of see under those headings, depending on what type of transaction would depend on whether or not you needed to provide those documents. It looks like one of those is cut off there under new construction. And it looks like that very last one, maybe there's a way we can make that better, but this is, that's a construction bid is we're looking for new construction. Sorry about that, I just noticed that. So we might need to expand that and get that out if we could do that. Okay, next slide. So that's a lot to digest. So I would just say, should we open it up for Q&A? Be happy to answer any questions you have now or later. You've got let's make sure we have access to we can hear if someone wants to connect. with me about microloans, they're welcome to contact me directly. Yes. Oh, there you go. Alma's on the line. Is she on the line? Okay. All right, great. So Alma, I got a lot of my information from Adrian. So if I was wrong on anything, you can blame him. But anyway, Adrian and I have been friends for many, many years. Anything on the chat? Are we sure that we have voice? Okay. Just want to make sure. Okay. All right.
So if there are any questions, attendees are able to type
Okay.
them in the Q&A.
Okay, great. Well, we'll sit here and okay. Answer two. Okay.
So it looks like no questions.
Okay. Oh,
Here we go.
typically, what is the debt service percentage for sole prop that your sole prop your okay? So what are the debt service coverage ratios that we look for sole proprietors? So what we do with sole proprietors is we have to kind of look at that on a global basis because it's all kind of one. And so what we're going to do is we're going to look at your personal expenses and the income that you produce through your Schedule C. And we're going to add back, for example, on your Schedule C, there may be some what we call non-cash charges like depreciation and if there's any, so there could be some analysis there of add backs. But typically our kind of standard fixed debt coverage hurdle is 1.25 times. That is to say that your cash flow, your net cash flow after paying taxes, after paying your personal expenses and so forth, is at least 125% of the debt, the proposed debt that you're that both the debts that you are currently servicing. But I would say the most important takeaway is global. We look at a global. So we're going to take the proposed debt, your existing debt, and we're going to look at your net cash flow minus your taxes. So net cash flow and determine that on that basis. What are the major drawbacks to growing a business organically using a portion of profits as the seed instead of requesting an SBA loan? What are the drawbacks to growing a business organically? Well, I think it's just a question of how quick you want to get there. If you are trying to grow organically, there may be opportunities along the way that you miss versus using financing as a source of capital. I think I'm answering that question. Let's see, are the major drawbacks in growing a business organically? I mean, I think that would be my response to that is, you can get there faster than you could organically, typically. If you are growing at the rate that you're happy with, then you can, by all means, just, continue to operate lean, pay yourself less, and keep pumping pumping profits back in and avoid interest expense. That's certainly, there's nothing wrong with that. There's two ways to get there. So I don't know what else to say there. Do they first have, and then the add backs are done? Do they? Let's see. John, there's someone. Oh, typically, what is a debt service? Okay, we do that. Okay, do they? Oh, do they? So basically what they're going to do is they're going to look at your net income on your Schedule C. They're going to they're going to add back anything. Typically, if you don't have any existing debt on that Schedule C, then they're going to add back depreciation, and then they're going to go back, and I'm assuming that all the source of income, personal income, is coming from self-employment on that Schedule C, because you're getting a business loan. So there's no, now it could be, that's okay, I can't either. It could be that you're, one of the other things is that your spouse, you may have a spouse that may work as well, and she may have a salary. And while we have to show that the business is profitable and can service the debt, it is also important, if there is a spouse or a partner that can provide additional income support, and we call that a secondary source of repayment, that can also be very helpful in our underwriting process. Okay, very good. Listen, it's been so nice. I appreciate y'all having me and allowing the Bank of San Antonio to come into your screens and talk to you a little bit about us and about SBA lending. And we certainly want to do everything we can to continue to help. We, as San Antonio grows, we grow. So we understand the importance of being tied together with all corners of our city. And so to that extent, we certainly I want to extend personally my hand out to have y'all call me and ask me any questions you may have. I'd be glad to help you in an advisory role and any role that you can think of in the context of this presentation, including lending. So thank you very much, and we appreciate it, and have a nice day.